Let's start with how well you've performed then in the bond trading business. My colleagues noting you're one of the few investment banks that had growth in bond trading revenue in the second quarter. How have you managed to achieve that?
Well, you know, it has been good morning first. Yes, it has been a very good quarter altogether for Natixis after a first quarter, which was very good. But effectively, in the bond trading, in the fixed income area, we had a 13% rise in revenues in the second quarter in a market where most of the company had decreased revenues. I think it's the illustration of a change in our business model. We've moved from a traditional house in this business to a very much solution-oriented, client-focused house, and we've been able to develop our relationship with our clients all over the world, from the Asian client base to the US, and it has been very successful for quarters on quarters, and this one is another illustration of that success.
The other side of the business, the investment banking side of the business, doing well as well. A very good morning to you, Laurent. Up 28% in terms of net income. I'm curious to know, I mean, European banking landscape is in fundamental dislocation. Commerzbank, Deutsche Bank, everybody's in change mode. Are you winning market share on the IB side and indeed on the trading side from the dislocation?
Well, yes, obviously we're gaining market share because our growth has been consistently higher than our peers for the last 4 years. And I think it's because we've been organizing ourselves in a very clear mood since that. We've got a strategic plan called New Frontier that is just arriving to its end by this year, and we're really on track on all our objective. And obviously, the fact that we're growing faster is an illustration of the fact that we're taking market share with a very clear view of our strategy, an asset-light strategy, very solution-oriented, and that is really the key of our success.
Do you see, Laurent, in your business any impact already from the relatively new presidency of Emmanuel Macron in terms of maybe reduced political risk? Maybe clients are talking about that, or a pickup in inflows. What impact can you attribute to the new president?
Well, you know, the size of the pure French business within our business is not that big that it has an influence immediately. But what is certain is that the view of the French economy outside has improved drastically over the course of the last months since Emmanuel Macron has been elected. And the confidence in the French economy has improved also very much. So we can say that this is a very good news for the perspective, the growth perspective of the French environment, and probably for the Eurozone part also. So that gives, I think, good perspective for the development of our business, and confidence, you know, is a big driver of business development altogether, and we will benefit from business development.
Laurent, the French Banking Federation has pledged to move or to win 1,000 jobs from London to Paris. Are you participating in that movement? I mean, we caught up with HSBC. They've put a figure on the cost of potentially moving their employees as $300 million. What can you tell us in terms of movement of human capital and the associated costs? Are you making any provisioning for that? Update us.
Well, no. In reality, London is a small center for us. Most of our business is located already in Paris or around the world. In London, we've got 620 people altogether within the investment solution and CIB part. So and most of that are salespeople. So we will probably follow some of the business when some of the clients are moving, but it will be minor relocation, so it doesn't need any very significant move, and doesn't need significant provision, because it will be done within time and given the evolution of our client base. But globally, we're not going to drastically change our setup in London.
Laurent, how do you assess the unwinding of the extraordinary amount of stimulus we've had from central banks of late? We saw the CEO of JP Morgan, of course, saying that it was going to be more disruptive than people think, the unwinding of the bond buying programs by central banks globally. Would you agree with him? How are you prepared for that?
Well, this is a great question, because effectively a big part of the market today is sustained by the fact that there's still a significant part of the bond which is bought by central banks, and the fact that this demand decrease within time will perturbate a little bit the market. So everything is really linked on the way this will go forward and how it is executed. Nevertheless, we will see some pressure on prices. We already have seen some in the US. We will see some in Europe when the ECB will move also the same way. I don't think that if this is well executed and well anticipated by the market, this will create major dislocation or major difficulties, but still it is something where we need to be careful, and we need to advise well our client on when they need to go to the market and take benefit of the current situation.
Laurent, we just caught up with the CFO of ING, and I asked him this question. We're seeing a repricing in the European bond market, a repricing in rates on the presumption that the ECB will join the readjustment program in terms of quantitative easing back. What does that mean for your business, and how optimistic are you that we're moving to a normalized time in interest rates? Give me your perspective on the ECB, and are we fully priced for the move? Well,
I think that for the time being, market anticipate that it will be a move that will, spread over time, and I do believe it is what will happen. So, yes, I think we're pretty ready for that, and our clients have been ready for that, there will be some period of little uncertainty, and probably we will see, and we start to see some more, I would say, selection over the right credit, and people start to be more selective in what they're going to buy as a bonds, with good names and names which will be less easy to sell on the market. So that is something that will happen and start to happen already. But it's, I think it's again, what I've said for the US is the same. I don't anticipate a significant dislocation of the market.
You just finally on your US business then, Laurent, you're a French bank with a substantial exposure to the United States. What is the impact on your business from plans for deregulation in the US, and are you concerned at all about a divergence on the regulatory agenda across the Atlantic?
Well, I think first of all, we're not doing any trading activities where we have our own trading. We're trading on the back of our clients, so the change in regulation is not going to affect us very much. It is, I think, it is a good period for all regulators to step by a little bit and to look. We've done a lot over the last few years, so a little bit of a step back and say, well, let's look to what has been the impact of what has been done so far, which has been, I think, very important. I think it is a good timing, and I think the fact that the US are taking this position is also a reason for the European to have the same position, which is really not to deregulate, but just to make a stop to the regulation, have a look to what impact it has on the global economy and the global banking system before doing any further changes. So I think this is a good thing, because the global banking sector needs a little bit of stability within that. Our US business is developing well, but again, as I mentioned, it's more developing on the back of our client business rather than any own trading position. We also have a very significant asset management activity in the US, which is developing well and taking benefit from significant flows this quarter.